How do I start? Where do I start? I don't know. I don't know what to do. I don't know where to go. I don't know. I'm so confused. Like, where do I go? I am not a licensed financial advisor. This is not financial advice. This is just me sharing information of what I've read. So, disclaimer, right? So if you need financial advice, do contact a financial advisor. You have so many of them, so many investment houses in Jamaica. Hi there, welcome to my channel. Do remember to like, comment, share, and subscribe. And thank you for continuing to watch my video if you're not new here. And do continue to watch. I hope you learned something new from today's video. Okay, so in a few months back, I did a video of things I wish I knew or things that we should have been taught in school, but we weren't. Instead, we learned about algebra. Have you used algebra since leaving school? Maybe not. Okay, so let's get into today's video. If you fail to plan, you plan to fail, and that is just the facts of life. That is just the truth. You need to have a plan. You need to have a vision, and you need to execute that vision. And remember, a goal unwritten is just a wish. Like, that is all it is. You hoping, wishing that it'll come through. You have to work towards it. Write it down, man. Write down your goals. I did a video last week about goal setting. So go ahead and watch that. Like, it's the last video on my channel. Okay? So, in this case, ignorance is definitely not bliss. Okay? It is not. You just wish you knew certain things. It's not too late to ever start anything. It's not too late to learn something new. You can learn something new every day. It's not too late. It's not too late to start investing. You can start off small. And it's not a lot to start investing. The first step you would need is to open an account, right? To have a brokerage account. But before we get into all of that, like, what exactly is investing? What is it? So on the screen here, you're going to see what it is. So investing is basically putting money into financial scheme, shares, stocks, property, or a commercial venture with the expectation of achieving a profit. Like, that's the whole point of investing. Like, you want to make a profit. Like, that's how wealthy people stay wealthy. And in this day and age, like, you need an additional source of income, and investing can be that. Like, everything has raised, like everything except person's salary, and you realize that cost of living has gotten so high, but yet still your salary has remained the same. Or if you do receive a raise, it's like a few percentage, and that percentage is not enough to cover your expenses and for you to live a comfortable life. And if something were to happen to you, like you are supposed to fall ill or have some emergency, like, what are you going to do? You need money. You need additional source of income. And persons don't like to talk about money, like, use it to exchange goods and services. So that's what investing is, right? And then we have stocks. So companies might decide that they want to go public, list on the stock exchange, and they have ideas. Companies have ideas, and they may realize that, hey, I have this idea, I want to expand, but we don't have the money to expand, so they want to raise capital. And how they do that? They go public. One way to do that, sure, they have to meet certain requirements, they have to meet all these requirements, everything. They have to meet the requirements to list to be a publicly traded company. And so they decided that they're going to sell their company to the public. So you and I, the simple man, the farmer, the teacher, the doctor, anyone now can own a part of that company. So when you buy a stock, you own a piece of that company. That's what it is. And there are different ways to invest. There are different things you can invest in. You have stocks or shares where you own a piece of that company. Unit trusts, and you have bonds, and there's a lot to do. So they normally start off small. It's required, like, just start off. The easiest route or the cheaper route in most cases is to own a piece of that company, to buy shares, to buy stocks of that company when they have an IPO, which is an initial public offering, when they're just coming out or being listed, and additional public offering, years later they may decide, okay, we need more money, so they're going to do additional or provide additional stocks to the market, and you can go ahead and purchase. There's unit trust, right? So that's where another way that you can invest. So as I said, unit trust. So it's a trust, it's a fund, right? A pooled fund of common, what you call it? Common assets. So take for instance real estate. So they may have a real estate fund. So you can buy into that, and that fund is managed by fund managers to ensure that you get or you should get the most yield out of your investment. Now that we got that out the way, let's talk about it. Like, how do I start? Where do I start? I don't know what to do. I don't know where to go. I don't know. I'm so confused. Like, where do I go? You know, all these questions. Just take a breath. Inhale, exhale. Inhale, exhale. All right, so where do you start? First, you need to have a brokerage account, right? There are a lot of brokerage houses out here. You have Sagicor Investment, you have NCB Capital Market, you have JMMB, you have VM Wealth. Like, there are a lot of them, right? Registered. So there are a lot. And they have made it easier. They have had platforms now that you can, you know, trade stocks online, but we're not getting to that yet. So where do you start? You need to have an account. You just need to have an account. The requirements are the same as you opening a bank account. So you've opened a bank account before, same requirements: ID, TRN, proof of address, source of funds, and they would need to know your risk tolerance. They'll ask you to fill out a form, to complete a form, to know your risk tolerance, whether it's low, medium, or high. You need to know what type of investor you are. Okay, so as I say, the more you contribute, the more you put into the account, the more you invest, the more returns you're expected to have. But that is depending on you and how much you're able to lose, because it's a risk, you know. Some days the market is up, some days the market is down. You never know what's possible. You never know what can happen. Look at the pandemic, you know, you see it. Like, sure, the market isn't what it used to be, and they're hoping that it will go back to that. So anything can happen. So you just have to know, you know what you want, set out a plan and a goal. So now you need to understand. So you've gone ahead now and you've created your account. You have an account with a broker, a licensed broker, right? And now you're ready. That's all you need. You only need an account and you're ready to invest, right? So you're ready to invest now. So what do you do? Okay. So recently there was an IPO in Jamaica. One Educational Services did an IPO, and I think it was $1 per share, right? So you said, okay, so you've read the prospectus, which you should read. You should read the prospectus to know more about the company, see their financial information, know if they're dividend paying stock, will they be paying dividends, or are you interested? Are you looking for a dividends paying stock? What are you looking for? So you need to know more about the company, and you also need to have a goal. Why are you purchasing this stock? Okay, what is the outcome that you have? Is this for a short term, medium term, or long term, like retirement? What is the purpose of it? You need to know, so that when you reach that goal, you are saying, okay, I reached the goal and I'm going to sell. So stocks can pay dividends, meaning that however they choose, whenever they make a profit or whatever is they have written in the prospectus, they can say, okay, you're going to pay dividends every twice a year, 3 times a year. They can say that once a year. You know, they can say that. It's all in prospectus. It depends on the amount of stock that you buy or shares in that company, right? It depends on how much dividends they'll pay out to you and how much you'll earn after taxes. Yes, the government take out tax too. Because it's a form of income. It's an additional source of income. Persons use their dividends earning to pay off debt, to start businesses, to invest in other things, because it depends, okay? And it is also, if you buy a stock, to say You're getting dividends, but it also appreciates in value, appreciation of the stock value. So one-on-one educational services, their stock was $1, right? And say for instance, when it's listed a few years down the line, it's worth $10 per share, right? That's a lot of money. So say for instance you bought $100,000 worth of shares. So you'd have paid $100,000. Since it's $1 per share, that's $100,000 that you would pay. And then a few years down the line, the stock is now worth $10. That's $10 times 100,000 units. That is the value of your portfolio for one-on-one, right? And then what if you say your initial goal was that, okay, when it reached $10, I'm going to sell a part of it. Maybe you don't want to sell the whole $100,000. Maybe you don't want to sell the whole 100,000 units, right? And you want to sell 50. Then you can go ahead and sell 50,000 units of your shares. And that would be 50,000 times 10. Or if you wish to sell it for a bit more than that, you can trade online by yourself, or you can contact your broker and say, hey, I want to sell 50,000 units of my one-on-one shares. I want to sell it for $10 or for the best price, but I won't go below this amount. So you can do that. You can negotiate. You can let your broker do it on your behalf, or you can do it on your behalf. They have platforms now, JMB Moneyline, where you can trade on a daily basis. Trading, I think, is at 9:30 to about 2:30, I think, or 2 o'clock, somewhere there. I can't remember. I have it somewhere. I can't remember now. But yeah, so it's in the morning to the afternoon. That's when trading is. Trading is on. It's not on the weekends. It's on weekdays. So you go, you post how much you want, and you just wait until someone say, oh, okay, this is a good deal, and they buy it from you. And that's how you do that. So by selling your shares for more than you bought it for. So as I said, you need to have a goal. So what is your goal? So when you're purchasing a stock, you need to know why is it that you're purchasing that stock, right? You need to know about the company. Do you use the products? Are they a good company? You need to work out all of that. You need to work out everything that you want. So is it that you're going to say, okay, when the stock price reaches $2, I'm going to sell this amount? Okay, are you going to keep it for retirement? This could be a retirement, So yeah, so you can decide all that. So it's just for you to have a goal. And also it's important for you all to try and contribute to your account, right? It's like you adding money to a savings account. Like your emergency fund, you add money, regularly to your emergency fund. This would be that you add money to your investment account regularly. So when an IPO comes out now, or an APO, or something comes out that you want to buy some stocks, or you want to invest it somewhere, you have the money readily available, instead of you having to go into your emergency fund and pull in that funds, or borrowing money, or you missing out on the opportunity. So it's important for you to contribute regularly to the investment account, so that you have the money there. It's there, like, hey, it's there. And I always have money to invest, like you're not left behind. So it's important for you to diversify your portfolio. Start off from the easiest, from stocks. Like the most or the least you can purchase in any case is 100 units. That's not a lot, but it depends on the share price also, because the share price can be $1,000 per unit. And then companies may have stipulations or certain requirements are saying you can only purchase $100,000 worth of shares. That's the least amount you can purchase. Some companies may say 100 units is the least you can purchase, But also remember that it's not guaranteed that after everyone has placed their order or their desire to purchase the stocks, after they've done that, and when the allotment comes out, it's not a surety that you'll receive all that you've applied for. You know, you may get half, make a little less, but you'll never get more, but you'll get what you've ordered or less than. I've said in the video, when I talk about the same video about the different, things I wish I knew before, leaving high school, is that you shouldn't be saving your money in the bank. A bank was created for transactions, meaning you use it to pay your bills, you use it to buy groceries, you use it to do daily transactions. That is what the banking system or the bank was created for. A bank don't even invest their. You think a bank leave your money in the bank? So when you go ahead and deposit your money in the bank, do you think the bank leave it there? No, the bank invest it, not in the bank. The bank invest your money elsewhere and make a profit. And tell me how much of that you've received in interest. They invest their money elsewhere and make profit, and then give us back less amount in interest. So why would you now save your money in the bank? You should only have that account they use to receive your salary, make payments for your bills, buy groceries, all of that there. And an emergency fund, and the emergency fund should be in an account that is interest yielding and that doesn't charge you a monthly fee. And one such account is a JMB Money Saver. Go ahead and do your research on the website, see all the requirements, see all the everything about the account. We're not talking about emergency funds in this account. We're talking about investments. But just to make you aware that banks do not save their money in the bank, because they know that it was created for transactional purpose. It was just created for transaction, sending money from one person to the next, paying your bills, receiving your salary, for day-to-day tasks. It's that. It's not for long term, because you don't make what you could have made if you had invested that money. So investing, so for instance, you invest in the real estate fund. So everything in that fund is, about real estate, and the fund manager's role is to ensure that the fund is profitable for the clients, like they're making a profit. So when you contribute to that fund regularly, and then you say, okay, I need that money to have as a down payment on my home, or I need the money to purchase a piece of land, in 3 to 5 years you can withdraw millions from the fund, as opposed to you finding it very difficult to save 3 million or so, or millions, in 3 to 5 years, right? See, understand? So you just have to do your research, read a lot. Go ahead and read, watch videos. Thank you for watching. Remember to like, comment, share, and subscribe. And that's the information that is there. Like, there's information there. It's there. Just go ahead and read. Ask question if you don't understand. Because in this, you see what's happening to teachers in Jamaica? Like, the cost of living is so high, and how many teachers do you know that have a house, have a car, and live comfortably? They cannot. I know the Prime Minister, or the Minister of Education, is going to say, teachers need to invest. I'm like, teachers can hardly provide for their basic needs. Where are they going to get the money from to invest? And yes, investment is an additional source of income, but where are they going to get the money to invest if they can hardly provide for their basic needs? You see? So read more, ask any questions you have below. We can get through this together, because we're all learning, and it's never too late. Sure, it would have been nice if we started earlier, but it is what it is. We're here now, we're in this present moment, and we're going to be great. So take care and walk good, and I'll see you in my next video. Thank you so very much for watching. Do remember to like, comment, share with a friend, share the knowledge, share the information, and do subscribe for more videos, and turn on your post notification so you're notified when I upload a video every Friday. I'll see you next time. Do take care. Bye bye.